I think what happened, especially looking at what was happening on Monday night, because all of those trends continued on Monday night. In fact, gold hit a new all-time record high. It was within $10 of 3,500. That's how much gold had gone up. It was above 3,490. Now, you may expect some profit taking at a round number like that. We were almost halfway between 3,000 and 4,000, and we had only just breached 3,000 like weeks ago, and now we're almost halfway to 4,000. But the dollar was getting killed. The euro was above 115. There was a 97 handle on the dollar index. Stock futures were selling off. Bonds were under pressure. They didn't make new lows, but they were on their way. And so I think looking at what was happening in the markets, the advisors to Donald Trump got to him and said, we need to do some damage control. You need to walk back that Truth Social post. And so on Tuesday morning, early in the morning, Donald Trump said, hey, of course I'm not going to fire Trump, Powell. He's going to be there until the end of his term, or I'm not going to do anything with Powell. And the market had a huge rally on that. And, it's hard for me to believe with all of the market savvy people that are in the Trump administration. A lot of people have come, from Wall Street, right, that are there. And they know that the markets are going to move big on comments that come out of the White House, even though nothing actually happened, right? Just somebody saying something, not actually doing anything, but just a post on Truth Social can cause massive swings in the stock markets, in the currency markets, in the crypto market. I'm sure there are people in the Trump administration that are trading off of this. How could they not be, given the size of the moves and the fact that, actual news. I don't even know if it's insider trading because there's nothing actually happening. These are just comments that really don't mean anything. And in fact, I think the comments are specifically designed to impact the market. I think Donald Trump's comment about Powell was, oh my God, the market's getting killed. I need to turn it around. So let me reassure the markets that, there's still Fed independence, because that was what people were worried about, that, this means that we're not going to have an independent Fed. We're going to have a Fed controlled by the White House, and that's going to be bad, as if, it hasn't been bad all along. But I agree that the more you politicize the central bank, the worse it is, because all the political pressure is for easy money. That's why it's ridiculous for Donald Trump to be accusing Powell of being political, in that Powell is not cutting rate, because that's political. So the fact that he's holding tight is more of an independent move, because the political pressure is to cut. Now, he should actually be raising rates. And I think the fact that he's not raising rates is because of political pressure.
By the time you're done listening to this, you'll understand exactly why the recent moves in gold are not just market noise. They're a loud, screaming alarm for what's coming. The mainstream financial media might still be asleep at the wheel, but if you're paying attention, you'll see the writing on the wall. Gold is surging, the dollar is crumbling, and the Fed has lost control of the narrative. And if you're still clinging to the idea that everything's fine because the S&P hasn't completely fallen apart yet, well, buckle up. Let's start with what we just witnessed this week. Gold hit another all-time high. Not just a technical breakout, but a historic one. It was within $10 of $3,500 an ounce on Monday night. That's not noise. That's not traders messing around. That's a fundamental repricing of the world's only real money. You don't see moves like that unless something is seriously wrong in the fiat system. Now, of course, you're going to see a little profit taking at round numbers. That's just how markets breathe. But this move is different. It's deeper. It's systemic. Think about this. Gold was barely above $3,000 a couple of weeks ago, and now it's nearly halfway to $4,000. That's not a speculative frenzy. That's the escape hatch being used by capital that finally understands there is no exit from this debt spiral except massive currency debasement. And yet, what was CNBC doing that morning? Talking about Bitcoin, again, completely ignoring the fact that the world's financial barometer just exploded. And this isn't happening in a vacuum. While gold was setting records, the dollar was getting absolutely clobbered. The euro shot above 1.15. The dollar index fell below 98 for the first time in years. These are not subtle moves. These are breakdowns. This is not a healthy currency regime. Meanwhile, stock futures were selling off. Bonds were under pressure. and nobody in the mainstream seemed to connect the dots. Now let's talk about the most underrated tool of economic destruction in 2025, Truth Social. That's right. The social media platform of the former president has apparently become the most influential monetary policy lever in the United States. On Monday, Donald Trump posted a comment that the markets interpreted as him wanting to replace Jerome Powell. That's it. No executive order, no legislation, just a post. And markets went into full-blown panic. Gold surged, the dollar tanked, and investors everywhere were scrambling. And what happened next? Predictably, the advisors around Trump realized they just broke the market and came out Tuesday morning to do damage control. Trump suddenly walked it back. Oh no, I'm not firing Powell. Of course not. He'll be around until the end of his term. And boom, markets rallied. But let me tell you something. That rally, it's not real. It's not based on fundamentals. It's based on pure, desperate hope that we're not already in free fall. Here's the real problem. When political figures can move trillion-dollar markets with a tweet or a Truth Social post, we're not living in a free market anymore. We're in a rigged game, held together with chewing gum and hope. And if you think the people around these politicians aren't profiting off these market moves, then you haven't been paying attention. You better believe there are insiders trading this volatility. They know the script. They're writing it. Now let's talk about this so-called independence of the Federal Reserve. That's the farce we all have to pretend still exists. Trump accuses Powell of being political because he's not cutting rates. Really? Because in reality, the only way to be political right now is to cut rates. That's what Wall Street wants. That's what the White House wants. That's what every over-leveraged, zombified company wants. The pressure is to ease, not to tighten. So, if Powell were truly caving to political pressure, he would have already slashed rates back to zero and fired up QE5. The fact that he's held rates this long, well, that's about as independent as we've seen from a Fed chair in years. But let's not kid ourselves. Powell's not exactly Volcker here. He's still behind the curve by a mile. Inflation is raging. Real wages are falling. Housing affordability is the worst in decades. And what are we doing? We're pretending that this is all going to be resolved by one more rate hike or some soft landing fairy tale. There is no soft landing. This plane was missing an engine at takeoff, and now the landing gear is gone too. Meanwhile, central banks around the world are buying gold at record levels. And you know why? Because they know what's coming. They're not buying treasuries anymore. They're not buying dollars. They're dumping them. And they're accumulating gold hand over fist. China, Russia, Turkey, they're loading up. But not just them. Even the so-called allies, even Germany, Poland, and Singapore are adding to their reserves. And they're not doing it because they think gold is going to $3,600. They're doing it because they know the current monetary system is on borrowed time. And let's not forget, gold isn't just going up in dollars. It's making all-time highs in euros, yen, pounds, Canadian dollars, Australian dollars. This is a global phenomenon. This is not a weak dollar story. This is a dying fiat story. Every major currency is losing purchasing power, and gold is screaming it from the rooftops. But what are investors doing? They're buying tech stocks. Still, they're chasing whatever is trendy on Reddit. And meanwhile, gold stocks, real cash flow generating businesses with no debt and high margins, are trading at bargain basement levels. Companies like Newmont, Barrick, Agnico Eagle, these should be exploding. Newmont just reported earnings that beat estimates by 42%. Their revenue is up 25% year over year. Their profit growth was 127%. What tech company is doing that? And yet the stock was up like 2%? That's insanity.
Gold was down 3%. The gold stocks, the GDX, was down 6.5% on the week, and the GDXJ was down 7%. Why? Right? It makes no sense. Yes, I know gold went down, but so what? It went down to 3,300. That is a very high price for gold relative to all of the earnings expectations for these gold stocks. Nobody that covers gold last year expected gold to be at 3,300. In fact, when gold got to 2,000 a little over a year ago, nobody thought it can go any higher. They all thought that was the top. And here we are more than 50% higher. And stocks like Newmont and Barrick are lower than they were back then when gold was at 2,000. Now there are some stocks that are higher, but the two biggest stocks are actually lower. So why should they even go down at all? They should just be going up every day, regardless of where gold is. Who cares? I mean, if gold's bopping around above 3,000, that is a phenomenal price. In fact, we got the Newmont earnings. They were the first major gold company to come out with earnings. We got those earnings after the market closed on Thursday, I believe. And so Newmont beat its earnings estimate by 42% above what analysts thought they were going to earn. That is a massive beat. Their year-over-year revenue in the quarter was higher than the prior year's revenue by 25%. That is a huge increase in revenue in a year. But their profits, quarter over quarter, were up 127%. I mean, how many companies in the S&P 500, Newmont's the only gold company there, are going to report year-over-year profits up 127%? A crazy amount. You would think, oh, this stock's going to be way up because, gold was up like $50 that day too. It was a day that gold happened to be up. So gold's up $50. The earnings come out and the stock's up like 2% that after hours. If the price of gold went to 10,000 tomorrow, right? And then it went down to 9,000, right? Would these stocks really have to get killed? Especially if they barely moved up on the move to 10,000, right? I mean, once you have this kind of breakout, which is what we've had in gold. See, what people don't really get is that for years and years and years, gold has been underpriced and underowned, right? Investors don't own it. Central banks have a very small amount. If you look historically, even though they've been buying a lot of gold, if you look at the gold that central banks own as a percentage of their total reserves, it's still historically low. It's not as low as it was, but it's still below historical average. That's because the currency reserves, mainly US dollars, have exploded. And so central banks have underowned gold. Retail investors have completely underowned it, and institutional investors. So the private sector has underinvested in gold, and so has central bank. And so gold prices have been too low. Meanwhile, the cost of mining gold keeps going up because of inflation. Now, if gold was purchased the way it should have been by investors and central banks, given how much inflation was being created and all the dollars in our trade deficits, the price of gold should have been a lot higher, but it wasn't. And the biggest victims of that were the gold mining stocks.
Now let's continue with what's about to happen, because I promise you, this next phase is going to be even more explosive. You're going to see things unfold in the financial markets that you didn't think were possible. Not because they're black swans, but because people refuse to see the storm clouds that have been gathering right in front of their face. Let's start with this. Gold is already trading like it's anticipating a systemic reset. Not a rate cut, not a soft landing, a reset. And why wouldn't it? Every single tool the Fed has left is inflationary. They can raise rates? No, they can't. The second they try, the entire system seizes up. The banks are fragile. The Treasury is borrowing over $2 trillion a year. Higher rates simply aren't sustainable. The federal interest expense alone is approaching $1.5 trillion annually. Just interest. That's almost the size of the entire U.S. defense budget. How long do you think we can keep that up? That's why they'll pivot. That's why they'll go back to QE. Not because they want to, because they'll have no choice. And gold knows it. Gold always knows it before anyone else. And here's the thing. When gold really breaks out, and I mean truly breaks out, it doesn't move slowly. It doesn't wait around for everyone to get in. It takes off and never looks back. We're talking 100 up days becoming the norm. $3,800 becomes $4,200 becomes $5,000. And people who were too busy watching the NASDAQ will wonder, wait, how did we get here? Well, because you weren't paying attention. Let me explain something else. When we say gold is going up, we're not saying gold is getting more valuable. What we're really saying is that fiat currencies, the dollar, the euro, the yen, are losing value. Gold is the constant. It's the measuring stick. So when you see the price of gold at $3,500 or $4,000, what that's telling you is how much value your currency has lost. And if you don't own gold, what that means is you've gotten poorer. It might not feel like it if you're still spending dollars, but you are. Because everything you need, food, energy, healthcare, insurance, it's going up faster than your paycheck. That's inflation, and it's not going away. Now let's talk about silver, because gold's little brother is about to come out of the shadows in a big way. Silver has been artificially suppressed for years. The gold-silver ratio is still over 90-1. That's absurd. The historic average, around 40-1. The geologic mining ratio is closer to 7-1. That tells you something is seriously out of whack. When gold runs, silver slingshots, It always has. It always will. And the silver miners, they're even more undervalued than gold miners. I'm not saying you put your life savings into junior exploration companies, but if you want leverage to a monetary reset, this is how you get it. These companies are digging out money from the ground. Real money, not tech dreams. But what's Wall Street doing? They're still playing musical chairs with zombie companies. Still trading garbage like crypto ETFs and high beta junk because they think the Fed is going to bail them out. Well, guess what? If the Fed does bail them out, it's going to be with a flood of inflationary liquidity. That doesn't fix the problem. That's what is the problem. Let's bring it back to earnings for a minute. Remember what I said about Newmont. Beat earnings by 42%. Revenue up 25%. Profits up over 120%. That's not a fluke. That's the new normal for gold companies when gold is north of $3,000. And yet the stock barely moves. Why? Because Wall Street hasn't figured it out yet. They're still anchored to the past, still waiting for some proof that this gold rally is real. Well, what more proof do you want? Central banks are buying more gold than at any time in modern history. The US has become a net importer of gold. Let that sink in. We're not selling our gold. We're buying it. The LBMA is delaying deliveries. COMEX inventories are draining. Something big is happening behind the curtain, and the media is silent. Now let's talk about de-dollarization, because this is not a theory. It's not a maybe one day scenario. It's happening right now. Foreign central banks are selling treasuries and buying gold. They're dumping dollar reserves. Why? Because they see what's coming. They see that the US fiscal situation is unfixable. They know the Fed will print. They know the dollar will fall. And when the dollar loses its reserve status, or even some of its status, that's it. Game over. The US can't fund its deficits. The Fed has to monetize everything. Inflation goes vertical. Bond yields spike. And then, another financial crisis. But this time there's no 2008-style bailout, because there's no foreign demand for dollars. The Fed is trapped. So what's the solution? For the individual investor, it's simple. Get out of the dollar, get out of US bonds, get out of overpriced tech stocks, buy foreign value, buy gold miners, buy real assets. Because when the music stops, you don't want to be the one holding treasuries yielding 3% while inflation is running at 12%. Look, I've been called every name in the book. Dr. Doom, the gold bug, the perma bear. Fine. But I'm not here to win popularity contests. I'm here to tell you the truth. And the truth is, this financial system is on its last legs. We're watching the end of an era, the end of the dollar as we know it, and a return, whether you like it or not, to real money. The market is voting every day, and it's voting for gold, not dollars, not Bitcoin, not Tesla, not the Fed. Gold. So don't wait for CNBC to tell you what's happening. By the time they figure it out, gold will be at $5,000 and silver at $150. You'll turn on the TV and they'll say, wow, who could have seen this coming? And I'll be sitting there thinking, I did. And so did anyone who was paying attention. There is still time to act, but not much. The window is closing, and when it shuts, you won't get another one for a generation. Take control of your wealth. Own gold, own silver, own the truth. That's it for now. Stay smart, stay skeptical, and most importantly, stay sovereign.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.